Hello traders, and welcome to another weekend's market forecast video. Hopefully you had a great weekend and a great week so far, and you are ready for the next week of trading in a new month. Tomorrow is July. So as we have explained over the last weekend's market forecast, we expected most of the market to remain choppy, especially the currencies, the forex pairs, because of the end of the month, which is typically the case. The last few days of the month we can see some choppiness before we enter a new month ahead. So with the dollar index, we have explained we expected a reaction lower with a possible move higher, and then the market will be getting ready to react to the downside. This is the structure at the moment. Anytime from the new month, from tomorrow onwards, basically, we are ready to start the move to the downside. Possibilities in case we do something like that possible, but still we should head to the downside first before anything else takes place. This will be our view for the next week ahead, and specifically also for the next one, because we also have public holiday Thursday, 4th of July, US Independence. So on that day the markets will basically do nothing, and then Friday 5th of July we have NFP, so the markets will become alive again from there. So dollar index, we expect the move to the downside first to take place. We would also like to show you guys, we have links in the description. This is, for example, our Telegram channel, and why we recommend everyone to follow us there as well. We are posting several things here and there apart from the member-only content. If you are not a member yet, you should consider also joining us with the link in the description through Buy Me a Coffee page. Other than that, on the Telegram channel or Twitter, our socials, we post things like that here and there when we want to share an analysis for free, or for example, we publish some trading tips, and we also sometimes post things like that, befores and afters, things that we have shown to the members ahead of time, and how the market has been moving as we show to the members. A lot of success in our analysis on the members area, so you can keep track of this through the Telegram channel and also our social links. So consider following us from there as well, so you are updated, because we don't usually make a video every other day to show these things, so we would rather publish them on our channels and things like that. For the dollar yen, we have got the pullback last week as we have expected, and we also got the next push to the upside as we have also been expecting and explained over the last weekend. And then we are expecting from here to soon get a reaction lower. So this reaction lower doesn't need to be that big, but it's going to be something like this minimum, or like this, before anything else takes place, because we are expecting the dollar to turn to the downside. It's also going to affect the dollar yen in certain degree. So at this stage, we don't like trading this pair at all. After this push to the upside from here, that's what we could have seen, but now things are not so clear, but the overall bias remains to the downside for this pair in the short term. Now for the euro dollar, we are expecting after this consolidation over here, the move to the upside to take place. As you have seen over the last week or so, we explained that the overall bias is only looking for buy setups, but the market at the end of the month, it's always choppy, and thus we have warned everyone about the choppy price action of the last days of the month. Now we are heading into a new month, so the market should be getting ready here to move to the upside for the next move higher. For the pound dollar, we have got this expanded flat corrective structure since the beginning of June, I would say. The market is getting ready here in a contracting triangle ending structure, and anytime from here it will start the breakout to the upside. So the pound dollar, as we have explained previously, we are only interested to buy this pair for the time being, and this will be the next move that we can see ahead in this market. Pound yen is similar to the dollar yen. We have got the move to the upside as we have explained last week. We have got here the pullback, you can see the spike, and then we have continued higher to the upside. So a little bit more upside is expected, small pullbacks in the middle like that, but the market overall should remain choppy to the upside for the next week. And we are not going to be surprised to see this one doing something like this for some time before it provides a move to the downside later. So this is not something that we would be interested to trade in this specific stage of this cycle of the market. And we don't like to take risks when the market doesn't have a clear structure to it or cycle or extreme areas to trade. So we would rather stay away for the time being for the pound yen until things become more clear. Of course, for the members, we inform them on the daily live sessions Monday to Thursday if there is something, and we also share trade recommendations when the market looks ready to us to make a certain move. The EURUSD continued the move to the downside as we have been expecting anyway. We were biased to the downside since a long time in this pair. It has already moved by 800 pips in our favor to the downside. We can see some choppiness coming to this market. Potentially we can get something like that before we drop again. This is not something we can exclude, but at this time we would rather let the market decide what it wants to do. We can see something similar to this structure here from May before the next move, but the overall bias for the EURUSD remains to the downside in general. Now for gold we have got this push to the upside as we have been expecting, then we have got this pullback, and then the market reacted higher again as it was expected anyway. We have explained that the buyers will still remain in control for gold since these levels here from the beginning of May, and this was exactly the case. And we can see maybe a small consolidation here in the beginning of the week, and then the market should break to the upside and break this trend line over here and start the move to the upside for the time being. And this will be the next move we can see in gold, and not looking for any downside at all, but we are looking to break this triangle and start the next move to the upside in gold. Now for oil, we have explained this bounce to the upside, what exactly it's doing. It's basically overall correcting the move down from the 5th of April into 4th of June over here. And now we can expect the market to give us a move to the downside first before the next move. But overall, the bigger move now is going to be to the downside in oil. And then the market can then decide if it wants to do a double correction higher, or from here we will consolidate and continue the downwards move. And anyhow, in the bigger picture, we have explained that oil remains still bearish to the downside, and we do not see any new cycle higher, at least for the time being. So the next move in oil should be this one to the downside to come down to the 76-75 area next. Now over here we are ending this move from 4th of June, and soon the reaction lower should take place in oil. For the SPX, we have forecasted the buy area from here to here, from here to here. Last week we have explained a small pullback for another new high. This was the case over here in the SPX cash index. And now we can expect a pullback to fill this gap over here before the next structure. Overall, we are not going to recommend selling this because this is the most bullish market you can get. A small pullback is expected. From there, we will see what the market will do, and possibly this could be a bounce coming next, but also we could start seeing some choppiness in the indices, something like this, before they decide to make the next move. So overall, we are not going to be looking for any trades in the indices, at least for the next one to 2 weeks, I would say, until we have enough data to provide the next move. Obviously, if we see something worth taking, the ones to know will be our members. So you should consider becoming a member as well, so you get trade recommendations on time, and when we see the best time to enter the market at the certain direction. But still, for SPX, like I said, we wouldn't like to trade it right now, but the next move should be a move to the downside, ideally to fill this gap. But of course, nothing says that we cannot see a very small pullback, another high before we do that. So this is why we do not like to take the short side, especially in the most bullish market you can get. Of course, concluding our forecast session with the two ETFs we publish every week, the 3Qs and the GDX. So for the 3Qs, very similar to the SPX, I would say, is going to be we favor first a move to the downside to make at least a 3-swing pullback from the highs. So something like this should take place before we bounce or make another high. So the next move should be to the downside, and then the market can decide whether it will bounce and do another double correction lower before it goes higher next. So this is the reason why at the moment we don't like trading indices and the 3Qs ETF as well, which is linked to the Nasdaq index and of course the SPX in its own way. But we favor first a move to the downside for at least this 3-swing correction at the moment. And for the GDX, the gold miners ETF, we have explained the buying area from this extension area here, 17th of June. The market reacted higher, now is consolidating, and soon we will see the next push to the upside, ideally to take place in this one. So thank you guys for watching another weekend's market forecast video. Hopefully you had a great weekend and have a good trading week. If you have any questions or you want to leave us a comment, feel free to do so in the comments section below. If you are interested to become our member and get our daily live sessions Monday to Thursday, the link is in the description. For any questions, email us at support@roiforecast.com and we will get back to you within the day. Until then, I will see you then for the next video, probably this midweek. We are planning to publish an individual instrument analysis or possibly a before and after video. So we will see you then. Other than that, enjoy your Sunday's evening and we'll see you in the next video.